Hey guys, James here with Waterford Business Solutions. And we all know and understand that accounting can be complicated. There's a lot of moving parts, there's a lot of different accounts, there's a lot of working pieces going on. And that's why we are here, is because we really want to help you understand what those parts are and how to be able to manage everything there and be able to become a master of your finances and your books if you want to be able to do that and you have the time to do it. Not everyone has that time and not everyone has that ability, but we want to help those that do to do that. And even if you don't have the time, we want you to feel comfortable in understanding what's going on so that whoever you choose to work with and whoever you choose to use, you have some confidence in what they're doing because you're not just carte blanche letting them run with it. So for that reason, we wanted to spend kind of the next 2 weeks explaining two major concepts in accounting to you. And we're going to start that with accounts receivable. In accounting, there's really two main types of accounting that are recognized by both the IRS and accountants in the accounting world as a whole. And that's going to be a cash basis of accounting and an accrual basis of accounting. Cash basis is recognizing that income when you physically receive the money, when you receive the checks, when you receive the actual money from the customer. Whereas an accrual basis, we're looking at when you're physically incurring the work and physically doing the work. And that's where accounts receivable shows up as an accrual basis. And we really want to look in that accrual basis because it's showing you when you're finishing a job, when you're actually doing that job, when you've earned that money, and when you are theoretically buying most of the materials, incurring most of the expenses to do that job. It's keeping all of that stuff aligned to give us a better idea of what it's costing you for that job and what are your material margins, your labor metrics, all those different KPIs that we can pull from your books there by doing this in an accrual basis. Many people don't do that because it is a little bit more complicated, but by tracking your accounts receivable and more importantly, understanding your accounts receivable, it really helps you to be better at tracking in an accrual basis. So let's start with what is accounts receivable. And quite frankly, it's exactly what it sounds like. It is money that you are owed from jobs that you have done. So let's say that you go out and you go do a service call on someone's house and they don't pay you on site. That is an accounts receivable. You've done the job, you've earned the money, you've now sent them an invoice. It's sitting in accounts receivable waiting for the customer to pay you there. Let's say that you go and you do a install for a water heater, an HVAC unit, something like that. Well, before you do that install, you require a deposit. Whether that's a 10% deposit, a $1,000 deposit, whatever it may be, but you require that deposit. When you bill for that deposit, until it's paid, that's an accounts receivable. It's money that you are owed in order to secure the job, in order to start the job, but it's not money that you have been paid. When you finish that job and you bill out the remainder of what is still due, until that is paid, it is money that you are owed or it's accounts receivable. So accounts receivable, in simplest terms, is money you are owed from work you have completed. So in theory, we want our accounts receivable to only show up or show finished jobs or money earned so that we can see that there. Now, it's definitely a little more complicated than that, and we want to make sure that we're also understanding the cash flow of everything here too, because in an accrual basis, again, we're going to go ahead and see on your income statement or your profit and loss the income from AR as soon as you send that invoice. As soon as you send an invoice to a customer, as soon as you request money, it creates income showing up on your profit and loss, your income statement there. Now, as a counter to that, it's going to increase your AR, which is an asset, until at what time it is paid. Once the customer pays you, it reduces AR and you're no longer owed that money. But we want to make sure that we are tracking all of that there. And we want to make sure that we're tracking that so that we can stay on top of our customers to get paid, because the longer it takes to get paid, the less likely you are to get paid. We also want to stay on track of it so that if a customer doesn't pay you, we can put a lien on their house. We can take them to small claims court depending on what it is. We can go after them in collections, whatever your method is, but that's why we want to be tracking accounts receivable so that you can make sure that whatever money you are owed, you are able to get. And we want to stay on top of that so that we're collecting it as quickly as possible. A lot of softwares out there now allow you to go ahead and collect on site, like Housecall Pro, like Service Titan, like Jobber. You can go ahead and run the credit card on site. You can get a check on site. So that helps to substantially reduce down any need for AR if you are doing that collection on site. But if you're not doing that collection on site, it could take you substantially longer. And we want to make sure that if you're not collecting on site, or even if you are, but you don't get that money on site, that as quickly as possible, someone is following up and saying, hey, we're still owed this money, so that you can get that money that is owed to you, hopefully within a month. Generally within a month, it's pretty easy to collect on any type of accounts receivable. Generally speaking, we're going to be looking at, for most businesses, having a 95+% chance of collecting that money. But the minute that it goes past a month, you've got less of a chance of collecting. And the longer it goes, 2 months, 3 months, 4 months, the harder it is going to be to collect. Now, part of that's going to be a situation of, well, if someone's waiting that long to pay you, they're just not going to pay, let's be honest. But another part of it's going to be that they might forget about it. They might not know about it. And if you're not constantly reminding them, if you're not constantly nagging them, that's money you're owed going right out the door. And that's the last thing that we ever want to see, or the last thing we ever want to have happen. So we want to make sure that we are tracking that accounts receivable. Hopefully you've got a accounting system in place that has an accounts receivable program, or at minimum you've got a dispatch program in place that helps you to see whatever that accounts receivable is, so that you can go ahead and make sure that at least on a weekly basis you are following up with these customers to try and collect that money. The quicker you're able to collect it, the more likely you are to collect it. At the same time, it helps with your cash flow. Finances and accounting is all about cash flow. The more money, the more cash you have coming in, and the less you have going out, the more profits you have. But the less money you have coming in, even if you're due that money, and the more you have going out, the more problems you could end up having and get yourself in upside down. So we really want to stay on top of everything there, making sure we're collecting as soon as possible on everything. The other thing with accounts receivable is, especially if you're using a dispatching program that's integrated with your accounting solution. The three that I mentioned earlier, Housecall Pro, Jobber, Service Titan, even going into programs like ServiceMate, Notify, Buildertrend, all of those integrate with accounting platforms like Sage, like QuickBooks, like Xero, where they can push in all of this information for you. But you want to make sure that you are reviewing these programs and reviewing the accounts receivable to make sure that everything is being pushed over correctly. If you canceled a job in a program, did that invoice get canceled in the accounting program? If you issued a refund, did the refund get recorded correctly in the accounting program? So we really have to stay on top of your AR, because if we don't, that's going to be one of the easiest ways and biggest ways that your sales can get messed up. Again, in an accrual basis of accounting, and even not an accrual basis, even in cash basis, most of your accounting platforms work off of an accrual basis and move it into a cash basis. So if you are working in QuickBooks, which works off of an accrual basis and has modifications to cash, and you're not monitoring and maintaining that accounts receivable, it's just going to create a bigger mess and really get your sales numbers substantially off. So we want to make sure that monthly, maybe even weekly, but preferably at least monthly, you go ahead and review all of your AR, making sure that what is being shown there is actually owed, making sure that any negatives are accurate as money that you owe to your customers, making sure that any thing that you canceled, any jobs that you canceled, that we canceled out those invoices, making sure that any overpayments are properly applied there, any refunds are properly applied, so that we keep that AR clean. The cleaner we can keep your AR, the cleaner your sales numbers and the more accurate your sales numbers are going to be, and ultimately the cleaner your books are going to be, and the better KPIs we can pull financially for you to help you better understand and grow your business. AR is definitely well, like I said at the beginning, complicated subject to understand, and this is really just grazing the surface of it. There is so much more involved in so many different things involved in managing AR. I mentioned refunds. We're going to in future be talking about, hey, if you're using like Housecall Pro, how does a refund affect your AR and how do we need to do that? So I definitely invite you to go ahead and like this video, share this video if you found it useful, subscribe to our channel to get more videos like this and to eventually better understand your accounts receivable and see a better grasp of all of that there. And if you've got questions or you need help getting it cleaned up or just understanding it personally, feel free to go ahead and reach out to us here at Waterford Business Solutions and give us a call at 864-351-0852 or shoot us an email at info@waterfordbusiness.com and we would be happy to help you out. Until next week, have a wonderful day.